Our stock market this week set a new all-time record high. Yet in the past 12 months, geopolitical tensions have increased rapidly after the October 7 attacks on Israel and the IDF's response to Hamas in Gaza and then in Lebanon against Hezbollah. Well, a year ago, I sought out Mark Woodruff, the Chief Executive of Citi in Australia and one of this country's principal deal makers. I caught up with him again this week and just got him to assess those risks for the capital markets.
It's interesting, isn't it? Because we sit here today and equity markets are at all-time highs. Deal activity is higher than where we were 12 months ago, yet geopolitical tensions are clearly higher than where we were 12 months ago also. I think the key reason for that is that the geopolitical tensions haven't had a transmission mechanism, particularly through energy markets. So if we look at the oil price, it's still relatively steady. You'd say about sort of $70 to $80 a barrel. I think what's more important for deal making, what's more important for equity markets is the clarity we now have around interest rate cycles. And we've seen, I think it's 13 central banks ease policy in the last 3 months. That has given confidence to deal making.
So that being the case, you talk about that sort of a mismatch in some ways. Risks are higher, but record markets right now are sitting out there. So again, everybody's banking on some big return from these interest rate cuts around the world. Do you get the sense that that return is going to be as great as what maybe those investors are banking on?
I think the risk around that relationship is that central banks don't ease as much as what the market is anticipating. And the reason for that would be that the consumer holds up. You know, what we have seen is that the consumer has remained relatively resilient. They've moved somewhat down the value chain, but they're still buying, it's particularly the US consumer. And therefore, what's priced in for the Federal Reserve may not materialise. And I think that may put some pressure on markets.
Can I just ask you about one other trend with central banks? Because we did speak about that a lot last year as well. And that is one thing Donald Trump has suggested, that he wants to have a say on interest rate setting in the future, which breaks the independence of the US Federal Reserve. Here in Australia, there's certainly been a lot of jawboning from politicians about what the Reserve Bank should or shouldn't do. I'm just wondering whether you are fearful of greater political interference in the decisions of central banks.
If the rhetoric ends up in the actual, then I am fearful. I think the independence of central banks is critical, whether that be in Australia or whether that be in the United States. I think clearly there will be some changes in appointees in the US if Trump is successful in the election. I'm not sure whether that threatens the independence of the Federal Reserve. In terms of the rhetoric here in Australia, you know, I think the less rhetoric, the better. I think for a long period of time we've had a successful and an independent central bank, and I'd like that environment from a business perspective to continue. You
almost get the sense that the politicians would like to take the credit for any interest rate cuts, but don't want to be responsible for any interest rate increases, or maybe settings that are not, if you like, suitable to the overall population.
Sure, I mean, I'll leave the politics to the politicians, but you can see that playing out, particularly as we go into an election next year.
The other thing that's also quite evident in markets right now is the appetite of private equity to come and play aggressively. You and I talked about last year superannuation funds becoming more prevalent in these deals and the deal making. Is that again something that's going to put pressure on stock exchanges around the world, that really they're going to compete to actually get enough big companies onto those markets?
I think the answer is yes. We're very active in conversations with private capital, whether that's private equity, whether that's infrastructure funds, whether that's superannuation funds. In fact, probably if we look back, it's only sort of 6 to 8 weeks ago, it's almost like a switch went on. And the private capital became much more active here in Australia. I think it is a challenge for listed markets. We see that. We see public going private, more often than private becoming public at certain times. And I think that speaks to regulation. And I think it is a question for global listed markets that have to do more to level the playing field between listed and private markets.
And with those private equity players coming in to make acquisitions, do you see any trend as to whether they're using more equity or more debt to back those deals?
I think if we took a lens through the deals that we've participated in, it's both. I think private equity in particular sat on large pools of capital for quite a significant amount of time. What we're finding now is the deployment of that capital is more aggressive. So that's clearly on the equity side. But if we take recent deals as an example, we're a significant financer as well for the largest private equity deal, which was the AirTrunk deal here in Australia.
Which was a massive deal, of course. But one aspect of all of this is, just looking back, do you get a sense that with more listed companies becoming private, that maybe some of the compliance for boards of directors, in particular around the strikes on executive pay, on corporate governance, that it's easier in a private world than it is in a public world?
I think some executives do look at it like that. Yes, I do. It can be more difficult. I think even the reporting cycles can become onerous for certain listed entities. But there are great benefits of listing in a market, and clearly liquidity is one of those. So I think these things will balance out over time.
So the last part about this is then for the investor themselves, who is an investor in, say, for example, listed companies right now. If there is less choice of listed companies to invest in, does that mean that portfolios become skewed? That even, say, for example, index funds, that they become a bit skewed in the way in which they're represented?
Potentially. I mean, we've seen that for some time. So it's really been the largest companies that have driven most of the gains in share markets over recent years. That started to balance out a little bit in the US, but still it's the top end of the index that drives most of the index return, as you can see. So if we look at the US, financials and tech have been the main drivers of those index gains. If we look down here, whenever the financials and the resource sector perform, the index performs. And so there is that natural sort of relationship to that makeup of the market structure. What I think is interesting is I think there is a case to be made that the supply and demand of listed markets is potentially misaligned. So without additional supply of capital into a listed index, you've still got wealth growing substantially here. Yeah. And therefore that demand for listed capital can outstrip supply, and hence valuations can naturally increase over time.
Well, talking about valuations being increased over time in a very rapid space of time, chip makers in the United States, notably Nvidia, have really put a rocket under those indices. You can see it even here with some of the big data centre companies. NextDC is a good example of that. So the question about valuations of these types of stocks is really unknown into the future.
It is, but the use cases continue to expand, and that gives substance to that valuation. So we saw as recently as last night, Nvidia was up substantially because of the new chip. I think we're seeing the use cases of those chips, but also the technology continue to develop. So traditional valuations models may not work, but if the innovation and demand continues through time, then it's probably a place you want to stay invested.
Mark Woodruff, always good to chat to you. Many thanks for your time today.
Thank you, Russ.